Banking giant HSBC is set to boost its wealth drive into China's markets. The banking corporation is also planning a lot ahead and is likewise looking at a re-entry in India. The recent move by HSBC aims at becoming Asia's top wealth manager by 2025. Asia is, anyway, the largest market for HSBC. Its new approach is touted to further increase the banking corporation's clout in the Asian market. The bank is hoping to further boost its portable wealth planning service called HSBC Pinnacle in China. The Wealth and Personal Banking Unit contributed around 44%, or roughly $22 billion, to the London-headquartered HSBC's adjusted global revenue last year. HSBC said it is focusing on recruiting for its Chinese retail wealth management sector. The latest push is mastered by a technique led by Group CEO Noel Quinn. This will see the bank investing $3.5 billion into its wealth and personal banking work. The CEO of Wealth and Personal Banking, Nuno Matos, is one of 4 top executives relocating to Hong Kong from London. He says that the bank is aiming for a regional boost and also has big plans for the Asian market, particularly China. We are the leading international bank in China, so we want to squeeze that opportunity. HSBC Holdings PLC is already quite ahead of its hiring targets for its Chinese retail wealth management business and is also exploring re-entering India's private banking business. Senior executives claim this move to be a part of the bank's plan to promote Asian wealth as the key pillar of growth. The company now plans to have around 700 personal wealth planners in the country, an increase from the 550 initially planned. HSBC's wealth management services include a variety of instruments on offer. From investments to insurance and asset management products, the company has a lot to offer to its clients. It also understands the needs of those with investable assets of $5 million or more and wants them to enter its private banking channel. According to Su Meng Tan, who is the head of HSBC Private Banking for Asia Pacific, the bank is looking to hugely increase its presence in the Asian market. The bank had 20 people operating in China's onshore private banking business at the end of last year, Tan says. By the end of this year, we will get to 64, and by the end of next year, we'll double that. HSBC is also looking to increase its Singapore and Southeast Asia presence. And in a similar effort, the bank bought French insurer AXA's Singapore assets for $575 million last August. Still, the bank has a lot to do to establish its dominance on the Asian market. Though HSBC has an already dominant Asian presence with its retail banking, mainly in the financial hub of Hong Kong, global leaders such as UBS and Credit Suisse still rule the market for wealthy clients. This is a sector that HSBC plans to enter swiftly. HSBC's plans happen to coincide with the sentiments of the global wealth managers who remain bullish about the growth prospects in China. The wealth managers believe that China still has a lot of potential, despite an unprecedented regulatory crackdown in the world's second-largest economy. According to a global wealth report published in June, the Boston Consulting Group said that Asia's wealth management revenue pools will rise faster than any other market worldwide and is expected to nearly double over the next 5 years, climbing up to $52 billion. Hence, this seems like a pretty good time for HSBC to expand its Asian presence. Asian wealth is expanding twice as fast as the rest of the world. This is a compelling opportunity for us, said Matos, who took charge of HSBC's newly combined division in February. HSBC is further exploring whether to re-enter the onshore private banking sector in India. It believes that the ranks of the super rich in the country are growing fast enough, and combined with record-high stock markets, a string of billion-dollar startups have emerged, which is a rather positive situation for the bank. If it happens, HSBC's return to India would come after the bank exited the country's private banking business in 2015 as part of a group strategy. The very competitive but ultra-lucrative Indian market has only a few foreign players as of now. And according to Matos, we want to bank mass affluent and high-net-worth customers. At this moment, the 2 major pillars we are expanding in India are insurance and asset management. On the private banking side, we're not there yet, and that's something that demands a strategic decision this year. I'm not going to redo our goals now, but what I can say is that in 2021, we will over-deliver our goals on the wealth side, he said. Currently, HSBC is focusing on catering to wealthy Indians from its several global hubs located in Singapore, London, and the Middle East. HSBC is also keen to gain full control of its asset management company in China, after it announced plans to buy out its life insurance joint venture partner in China last year. HSBC Pinnacle, which will focus mainly on client-facing roles for its mainland digital wealth planning venture, will have about 700 personal wealth planners on the ground by the end of the year. The current hiring spree is a part of a $3.5 billion investment in its Asian wealth business over the next 5 years. As Beijing moves to further open its financial sector to foreign banks, HSBC has decided to grab the opportunity. According to what Matos said, that investment is going exactly at pace. The investment is being delivered to improve our platforms for private banking, for affluent wealth, to put everything we do in mobile, Matos said. Our ambition to be the leading Asian wealth manager is coming to fruition. We are already the leaders in Hong Kong. We want to be the leader in Asia by 2025. In the first half, revenue from HSBC's Asian wealth business rose 26% and global wealth balances, driven by Asia, increased by 18% to $1.7 trillion. The adjusted profit before taxation, particularly in the wealth and personal banking business, more than doubled. It has now reached to the tune of $3.86 billion in the first half, compared with $1.66 billion in the same period last year. The bank, the biggest of Hong Kong's 3 currency-issuing lenders, also plans to hire for 1,000 roles across all of Asia. It is in an attempt by the bank to add 5,000 personnel in the Asian region by 2025. As China further opens its financial markets, HSBC and its competitors are preparing for the start of the Wealth Management Connect scheme. This scheme is deemed to allow a flow of funds to the tune of approximately 300 billion yuan, $46.5 billion, between 9 cities in Guangdong Province, Hong Kong, and Macau. The first products could be launched as soon as October. It is a pilot phase initially. Over time, the intention is clear, said Greg Hingston, HSBC's Asia-Pacific Regional Head of Wealth and Personal Banking. This is going to continue to open up, hopefully, and provide the kind of breadth of investment options for those 9 cities in the mainland you can get out of an international financial center like Hong Kong. HSBC is also searching for some potential acquisition targets. In August, the bank said that it is likely to make 3 to 4 small bolt-on acquisitions. In 2021, HSBC also agreed to acquire the Singapore insurance business of its French rival AXA for $575 million. This will help the bank to focus on strengthening the distribution and product base for its wealth business in Singapore. According to its officials, the AXA acquisition, which is awaiting regulatory approval currently, can be similar to Pinnacle in China. This comes as a move to expand the bank's reach beyond its traditional branch network. The AXA deal also adds several employee benefits and health coverage to the bank's product mix in Singapore, while also providing access to a large prime agency base. Without a doubt, HSBC is delivering a huge wealth push in China. It really considers the Chinese and the Asian wealth management market in general to grow at a really good pace. The banking corporation is really hopeful of its prospects, and it is only for time to tell how much of it is successful. What do you think about the move by HSBC? Tell us about it in the comments section. Also, press the like button if you like the information and tap share to share this video with your fellow investors. Do not forget to subscribe to our channel for more such videos. We will be back soon.